everybody, welcome back to my Daily Dose with Tim. Today is Season 2, Episode 25, which is also Part 4 of the same topic that we've been covering this week, which is 5 ways to financial freedom in 5 years or less. So over the last couple of days, I've actually shown you one way of how you can get there already. And that first way didn't really have a lot of time-tracked goals attached to it. However, my point has always been it's a lot more attainable than what most people think, as long as you have the proper knowledge and the proper guidance and people holding you accountable to keep motivating you, pushing you forward a little bit, challenging you to get outside of your comfort zone and apply what you've learned. And honestly though, over the years, that's really one of the biggest differences that I've noticed as well, is the people that have not only learned something, but really just taken it in and run with it. And I know that's a lot of the times easier said than done because we all lead a very busy life. And this is why I really strongly believe how much skin in the game you have really determines how quickly you're going to run. I remember when I invested $50,000 in my financial education, my first thought is I have to make my money's worth as soon as I possibly can. And just so that it happens, it actually happened within about 25 months since I got educated. And so today I kind of figured I would share a little bit of my story with you. Now, I just want to let you know that this is going to be a bit of a short-handed version of it, just because there were a lot of small minor deals in between in the first 25 months ever since I was getting educated. 10 plus years ago now. However, I want to give you the big picture because a lot of you guys know that lease options is actually my baby strategy, which means that it was my chosen strategy as the very first one that I focused on in order for me to free up my time. Again, I'm going to be covering lease options a whole lot more in details later on during this season as well. And next month, as you probably already know, Trust Your Talent is putting on a free boot camp. It's 5 days worth on lease options as well. Now, the point is, I want you to focus on the numbers and how I was able to gain my time back from that. And it really happened at a very, very good time, just simply because of the fact that I got my third minor heart attack back in 2011, which was about a year-ish after I started getting educated. And so that also became a bit of a wake-up moment. I know a lot of people, they're like, what do you mean? Like 2 heart attacks and the heart surgery didn't actually wake you up already? No, it didn't, unfortunately. And that's the thing. I just think that so many of us live the same way. We always think that we always have more time. We always think that, hey, you know what? I've recovered from whatever challenges that I got already. It's probably not going to happen again. And that's what I thought too. That's what my cardiologist thought. And then yet here we are. So anyways, I digress. I want to quickly lead you into it. And as we already said, a lot of the times, an average lease options usually has a cash flow on a monthly basis of about $800 a month. However, again, that also has a lot to do with the fact that the market values have overall gone up from coast to coast, and as well as the property values. So when I first got started, I just want to let you know this is now back in the year 2010, 2011-ish, okay? When I first started applying this. And so the average cash flow on a lease option on a monthly basis was roughly about 600, okay? About 600. And I'm gonna use non-blue because this is all blue right now. So I'm just gonna share with you right now, year 1, some of you guys already know this, I actually hammered out a dozen. So no more, no less, a dozen lease options. And how did I do that? Well, I just look at it this way. On average, each deal was $600 per month in cash flow. And because on paper, I still had a corporate job. So back in those days, because the property values were not as high, or at least in the market that I was applying this strategy in, which is pretty much my home market in the surrounding areas, which is Edmonton, Alberta, right here in Canada. And so I was able to hammer out 5 of those deals just based on my personal qualifications. Did I have to borrow money from other money partners? Yes, absolutely, because I didn't have a lot of cash left after deal number 2 to qualify to buy more properties. So I'm still going to use 600 here because the way we structure the deal, more or less, basically meant that I was able to debt service or repay my money or cash partners at the end of the deals when they were wrapping up. And so I'm going to use that right now. And I also did 7 joint ventures. And so we were doing the 50-50 split. So instead of $600 per month in cash flow, I was collecting half of that. And I was what everybody would refer to as the managing partner. So I was bringing in money partners and we would form joint venture partnerships. And they would come in and qualify, bring the down payment, and bring the closing costs. And I would actually manage the deal right here. And so as you can see, this is now $3,000 a month plus $2,100. So within the first year, once I hit the ground running, by the end of the first year, I basically created $5,100 on a monthly basis in cash flow. And that's about it, because that's all I was focusing on. And then we go into year 2. So year 2, instead of doing 12, I kind of thought, hey, you know what? If a newbie like me, I just learned this, I just did my mentorship, and I'm going to be focusing on the strategy, is 12 really enough if I don't dabble into any other strategies? Well, it turns out I decided that I'm gonna do double what I did the first year, even though I had 0 qualification, 0 money left at this point. And so what ended up happening is really 300 times 24. Obviously, every single deal is a little different. We had 2-year deals, 3-year deals, and 4-year deals all lined up at the same time. So the cash flow per deal would vary. However, the average remained the same. So 300 times 24, well, guess what? That's 7,200 right there on a monthly basis. And in addition to that, simply because I started to become very, very active in the community and I was constantly looking for money. And this is also why raising capital, raising funds, going out there to look for joint venture partners is also another subject that is very near and dear to me that I love sharing. And funny enough, every time I go out and do a mentorship, a lot of times this is what we actually focus on, is to make sure that you understand how to position your business, your deals, your ideas, and your processes to the people that are going to potentially be investing their hard-earned money with you. And so because of all that activity that I was doing, I ended up actually having more investors ready to partner up on deals with me then I actually had quality deals. And this is what I always say to my students, is that if your first deal is your best deal, you're probably doing something wrong. Because in my opinion, every single deal from a quality standpoint should be getting a little bit better and a little bit better as you go. Why? Because inevitably, every single deal, I have never heard anybody, honestly, I have never heard any investor professionally say, whoa, that deal was really smooth, it went through without a hitch. It's just funny, like it seems like there's always a little bit of something to learn every single deal, and my point is there's always something that we can improve on, whether it be process, it be the deal, it be the acquisition process, or whatever it may be. There's always something. And so the point is, I got to the point where I had more money than I actually had deals. Why? Because I started to become a bit pickier and choosier in what I wanted to put through and what I would actually park my money partner's money in. Meaning I got a little bit, the standards got raised in terms of the tenant buyer's qualifications in this particular case, okay? And so when I had more money than I had deals, guess what? I decided that I'm going to branch out a little bit, but not too far into lending money, because at this point, not only had I learned how to conduct lease option as a strategy through and through. I've also learned income properties. I've also learned distressed properties, fix and flips, how to burr properties, as well as buying commercial properties and multi-unit residential as well. And so, long story short, I started facilitate private lending too, because I don't want my investors' monies to just sit there and do nothing, because the whole idea behind why I actually want to help other people make money and with their money work harder for them as well is simply because that is coming from a personal pain and a personal experience. If you go back to some of my past episodes, for those of you who are watching this for the very first time, you'll know one of the biggest reasons why I decided to get myself really educated is simply because somebody else took my money and ran, and that was my hard-earned dollars. It was heartbreaking when that happened, and I just felt completely helpless. And so one of the things that I learned along the way is that really we live in the world of abundance. It should be about creating win-win situations. Yes, I'm winning because I'm making money. However, I'm making money simply because I am adding value to other people's lives. So at that time, I was able to go up to people and say, hey, you know what? Whatever it is, your bank or your current investment portfolio is paying you, I'm pretty sure I can double that return and give you better security because your money is secured against hard assets. And I will be managing the entire process. By the way, I'm going to explain to you how my business process and what my system looks like. So when that started to happen, I was able to actually gather a lot more money. And instead of just letting it sit there and wait for the next lease option deal to happen, I started to delegate those funds into the other deals that I was looking at. And so instead of having to wholesale them out now, I didn't have to, because I could now be the middle person and almost be a money partner, because I'm representing my money partner now, and I can go out there and look for the other management partners too who are running those deals. And this is how we start to create those win-win partnerships as well within this industry. And so to just round it off very quickly, I had about $800,000. By the way, I really had to go back and dig a little bit through my paperwork. And this is like a decade ago now, like I'm saying. And so these days, I basically just leave all the number stuff to the accountant. A lot of people like to ask me, why don't you ever showcase deals that you're doing or your properties? I'm just going to tell you, because to me, it's never been about the properties. It's never been about the properties. If it's about the properties for you, this might not be the right channel for you. I'm just going to say that. Or if you've been misguided, I'm going to use that word as well. When you want to become a real estate investor, you need to remember you're investing because you have financial goals you want to hit, not because you simply want to pick up properties and deal with marketing it, screening tenants, and the landlording duties of it all. Okay? So make sure you understand what this is really all about. So that being said, I had about $800,000 in total, and between borrowing and the returns that I was making, I had about a difference of 3%. So it's not a whole lot. However, it was something. And also, even though on paper it's 3%, really in actuality, what does that really mean for an investor? That means my return on investment is actually infinite. I'm getting paid based on my knowledge, my experience, and my network, okay? And so what that works out to be is $24,000 a year, however, $2,000 on a monthly basis. And so this is why a lot of people, when they ask me, how do you do this in 2 years? Well, here you go. And I think this is actually the very first time I've shared my journey like this with anybody. I haven't gone back to look at these numbers in a very, very long time, because we've basically lost count at this point in terms of how many properties we've actually transacted or even hang on to. Because I always say, you know what, it ain't about that, right? I know maybe Starbucks is not the best example because they probably know how many number of stores they got. At the same time, really, it's really about building a viable and profitable and cash flowing business on a monthly basis, because your true wealth is measured by time, okay? And what I mean by that really is every single month, in order for you to live, you have expenses you have to incur. So if you have enough cash flow to cover those expenses, I don't care if you've got $0 saved up in the bank. Equity, in my opinion, doesn't matter. Savings doesn't matter. Your portfolio income does not matter as much as your cash flow, because all those things we talked about, most of them don't even pay the bills. What we need is cash flow on a monthly basis for you to pay the bills as well. And so this is how we managed to get ourselves out of the rat race very quickly in about 2 years. And so I just wanted to share that with you because I promised you 5 different ways. And so today, this is the second way that I can share with you. And I can build upon it. If you want to, send me a text, maybe message, comment on this. However, if not, then I'm gonna go into the third way as well. So that's it, and thank you so much for your engagement, for your encouragement, and for sharing my videos with those who you think can actually start learning and maybe just tweak their mindset a little bit, because this is something that I am truly passionate about. I hope that comes through. I know it's just a camera and just me talking to you most of the times, and actually the only times. But this is something that I really want to continue to spread. It's the message that financial freedom, financial security, financial independence, or whatever you want to call it, is a lot more attainable. However, one thing that I maintain very firm on is that every single one of us, we need to make that commitment and make that decision and really make it a priority, because it can happen and it will happen when you want it bad enough. So with that said, thank you so much for joining me again this week. Next week, we're gonna carry on with the same topic, and I'm gonna keep sharing with you the different ways. And if you like to, share with me what your current situation might be, and you want me to basically use that and build a plan for you, I am happy to do that for you as well. So make sure you reach out to me. So have a great evening, everybody, and have a great weekend. I will see you back here next week. Live well, everyone.